In the previous video, I worked out the analytical vega for the butterfly. In this video clip, I'm going to work out the analytical theta for butterfly. Previously, let's set up a new spreadsheet and we'll copy. Just to note, to work out the analytical vega, all that was required was to estimate vega for the call option. And for each of the call positions, there are in the butterfly 3 options, but 4 option positions, 2 long calls and 2 short calls, where 2 of the calls at the middle exercise are sold or shorted. So here we have we estimate the vega. To get the theta can be obtained in the same way as the vega. So for instance, here vega was just the formula brought in from Visual Basic Studio, Visual Basic applications, and we went into Visual Basic Editor, and we came down here to the vega, which is the same for the call and the put, and we took the formula from Wikipedia initially and set it up here. So if we go back into the spreadsheet itself, to estimate the theta, we work out first of all the theta of the call. So let's get that formula, and it's the call option that we're looking at, so it's theta c, and we just say okay, paste, equal, put the equal sign in front, and we have s, we have k, we have t is in this instance 6 months, risk-free rate is equal to 5%, dividend yield happened to be 0, and the volatility here was 20%, and we get negative 4.78, and we do that for each of this. So for the next option, the theta of this option with these parameter values is negative 8.11 and negative 396. Okay, and then to get the theta of the butterfly, quite simple. In this instance, all the options are given an equal weight. So we'll say we add the first option with an equal position, the second option, but there were 2 short positions at the middle exercise, so 2 times multiplied by this middle theta, and that's the theta for the butterfly. So if we took this, copy and paste into the new spreadsheet worksheet, and took out the vega, so we just delete, and for tidiness eliminate that other row and say okay, here the theta of the portfolio is equal to this cell, so we're referring back to C14. So remember, theta of the butterfly. Okay, and then we say okay, we want to generate that theta for a range of different prices, so 10, 20, and we had been going up to 200. So we just drag it down and we come up to 200, and then with a data table we rerun that. So data, what if analysis, data table, it's a column of data, and this is the original parameter input. and we verify here this cell changes when this cell changes, and this cell here changes when this one changes as well. So for 100 we get the same result as here, and so we can verify the result is correct. We can graph just to see what that looks like, and we can go insert, scatter, and we get this kind of configuration. So the theta of the butterfly is higher at the average, at the middle exercise, and then get smaller. So perhaps we can get a template that improves a little bit the granularity of, and make our graph a little bit bigger just to view. So here we have theta of butterfly, and here value of the underlying, so it could be the stock price, value of the underlying. Okay, so okay, now what does mean? Remember the theta mean, the way we interpret theta. If we go into Wikipedia, option Greeks, Wikipedia, that theta involves looking at the change in the value of the portfolio with respect to time passed or time decay. So we're looking at how does the value of the option change, or the option portfolio change, with time decay. And so importantly, we're looking at the change delta lowercase t, or delta, the value of the portfolio. So we could think of the option, in the call option, with respect to change in the lowercase t, or time passed, or the change in the value of the butterfly with respect to change in the value of the amount of time that has passed. Okay, so as time passes, the value of the option or the value of the portfolio here would rise. And we might think one way of rationalizing this, as the option approaches maturity, then the chances, if we start at a stock price of 100, a stock price close to the middle exercise, the chance of drifting outside, away from the middle exercise, becomes less and less. So the butterfly becomes more valuable. Okay, and that's an interesting feature of the effect of time on the butterfly. Okay, so we'll save here and post.